Hello, everyone. Welcome. My name is Hansel Enriquez, lead for Groundfloor's LGBTIQ plus and allies employee resource group. Joining me today for our investor spotlight is our esteemed Groundfloor investor, Andrew Cuomo. Hello, Andrew. Thank you for joining us.
Oh, hello. Nice to be with you.
Yeah, well, you've been with Groundfloor for about 5 amazing years now. Why don't you share with us where are you from and how did you first hear about Groundfloor?
Where I'm from is probably ancient history that would bore everybody to tears, other than I'm an Italian New Yorker.
Yeah, I was about to say with a name like that, kind of gives it away.
So, watch Goodfellas and you know where I came from. I actually did some hard money lending in a couple of transactions before I learned of Groundfloor. And I realized how profitable it was, high interest rates, high points. And so when something like Groundfloor came along, I thought, this is perfect. I don't have to, doesn't involve the very, very large amounts of money in one investment. You can diversify. You have somebody else looking at the value of the property and assessing skin in the game and, loan to value ratios and all of that. I had to have referred at least 50 people to Groundfloor.
50 is a pretty large number. You have a rich work history, just to say the least. So I was able, I think, to narrow down your skills to corporate development, but as one of your experiences. So why don't you share with us what kind of work do you focus on, and what type of work do you do now?
This job is a little different. I'm the CEO of a travel technology company that is located in Bulgaria. I only wanted to be the chief commercial officer, but I was the chief commercial officer. But the CEO in Bulgaria initiated a political party and started it from scratch and won the election and became the minister of finance and deputy prime minister. And he left the company, and so I became the CEO. My role has been and continues to be strategy. Strategy in product development, sales, looking for investors, financing, and then actually closing deals, closing large transactions. So it was very much a startup. From time to time, you worried about how you were making payroll, and in fact, didn't make payroll a few times.
Well, you let your company through COVID. Well, this company,
yes, well,
COVID,
right.
and there were different other factors.
Yeah, so we were a travel technology company that started in late 2019, 6 months before COVID.
Just the right time.
Yeah. And so we signed a lot of customers, big customers, Kiwi, eDreams, lots of big travel companies, but they had no business. So they had no business. And then when they did have business return, they had all laid off their developers. And so they couldn't implement our platform. So we reached a real danger point, but then recovered with some last minute deals. And so we seem to be on a healthier path now.
Is that type of work that you do now? I think it organically developed into that currently, correct? How did you start with your approach with law?
I was originally going to become an assistant district attorney in New York, which was the political path. But I spent a summer in Washington working for the Senate Judiciary Committee as an intern and discovered that I hated the bureaucracy. And then when I thought about doing assistant district attorney, the courses that I did worst in law school was criminal law and family law, because it made no sense to me. And the areas I excelled in was commercial law, taxes, property, contracts. And that was opposite to anything I ever thought I would do with my life. So when I reached the airline, that put me in a good position to really be more interested in the business of the airline as much as the law involved in it.
What was your first job?
I put an ad in this little thing called the Penny Saver in Long Island. It's just sort of like, free at grocery stores. And it was a little one-line ad that I paid for it that said, we'll do yard work for $1 an hour. And I was 11 years old. Started working illegally before I was 16. at a donut shop. So at
Uh,
16, for example, I bought a new car.
You're impressing me more and more. I did not know that, Andrew. So let me ask you about this then. Now we're talking about the workforce. You have a beautiful family, and you came out as gay later on in your life. Well, first, let me ask you, how many years has it been since you've been out?
2003.
That's amazing. Congrats.
Well, part of it came out because the divorce was pretty public. But in my subsequent jobs, in 2003, I had just left American Airlines, or AMR Corporation. Then some friends of mine had invested in a company down here in Atlanta, and they knew I was gay. Yeah, so that was not an issue. But beyond that, I came out to my boss and to people who I worked with, but they all respected my desire not to have the first thing told about me to other people as being gay.
Right.
Okay? As opposed to my sons, by the way, who, when they brought their friends home from school and weekend, the first thing they would say is, "This is my father, he's gay." They were pretty proud of it, I think.
What about now? I know you're the CEO of the company, so how do you find yourself being out in the company?
In Eastern Europe, where a lot of the people are very conservative, I just don't make telling them my sexual orientation as an issue. And I know if I did, because of comments made, that it would be a big negative. And I don't want to deal with it. I think doing that would harm the company.
Most of your employees, if I may say, sorry, are in Eastern Europe. Is that correct?
Yeah.
Okay. Because you have to work with different factors here.
There's a lot of Bulgarians that go to Provincetown, Massachusetts, every summer to work and make lots of money. Provincetown is a gay community. Anyway, a few of the people who work in my company actually worked in Provincetown, and they know I have a place there and go there often. So I'm sure they put it together. But
so I wanted to ask, if it's not politics or something else, what type of causes are important to you? Would you maybe share also organizations, nonprofits, et cetera, that you support?
I'm like everybody else in that I probably post too many political posts on Facebook and Instagram, which does nothing, right? I've probably eliminated all my friends who think, who are staunch Trump supporters. So over one argument or another. So my goal is to get more involved,
I think,
and my organizations are Doctors Without Borders, the local Democratic, gubernatorial U.S. Senate candidates.
Doctor Without Borders, just to name that one, has been very busy with current events going on and whatnot.
And there's also an organization locally called Chris Kids, but they have a special division of Chris Kids, which sets up housing for LGBTIQ people, kids who come to the city, thrown out of their homes, who have a place to go. So they give them a place to go. They give them career counseling, psychological counseling. They've developed a whole apartment complex for them.
Well, thank you so much. And you're giving us a couple of organizations to keep in mind. A little lighter question, like out of the many, like what is one of your favorite qualities?
I'd say adventuresome.
Okay. I like that.
For new experiences. I've had the experience. My parents were Italian immigrants. We never graduated from high school. In fact, my father only went through the 6th grade. We lived in public housing. We lived off every social welfare program that existed. So I had that wonderful experience of living in the projects and being poor. Thank you very much. That's over. So going to college, and I went to Notre Dame and then went to Notre Dame Law School. I guess I have to say that took some adventuresome spirit to try and think that I was worthy of doing that and actually getting it done. I was way out of my comfort zone, and I think I still have that today,
Well, now let's talk about investment, shall we? Before I do that, just a little quick disclaimer that Andrew and myself are not financial advisors. To check more information, including terms and conditions about Groundfloor products, services, and promotions, please visit www.groundfloor.us. So one of the great features about investing in ground floor is how easy and accessible it is to invest, right? One can start investing in private real estate with as little as $10 without paying any fees. So my understanding is that growing up, like you mentioned, your family did not make the same amount of income that you make today. You worked really hard to be where you are right now. Yeah. I wanted to ask you, at what age did you make your first investment, or one of your first investments, and what type of investment was it?
It was actually a couple months following graduating from law school that I bought my first house in Dallas, Texas. Then I bought other rental houses.
So you continued in real estate. I see.
I started
Okay.
on buying some dilapidated properties, refurbishing them, and keeping them as rentals. And they weren't low-end rentals. It was this, the last thing I would do would become a slumlord. And being gay, of course, not knowing it then, but my houses had to be fabulous, right? So
Of course, and it still is. Just the background that I see, it's some mean curtains. I love them.
I loved getting these houses, and I lived in a historic neighborhood, so I'd get these houses and fix them from the ground up. Foundations, new ceilings, new walls, new bathrooms, new kitchen, carpet. I took these houses, and I had 6 units, and I kept them until the mortgages were paid off, and then later sold them.
Another benefit of that minimum $10 investment is that you're able to diversify your portfolio, right? As you know, when you invest in ground floor, you can customize your own portfolio. Some of the ways investors can choose that is you can do it yourself. You can use tools at your disposal like the investment wizard, where you can choose your own risk in the letter grade. Or you can also auto invest. You can input the maximum amount in any letter grade, and automatically invest as LROs are released. So I wanted to ask you if you have an overall strategy when investing in ground floor. Are you looking at location, letter grade, or if you could guide us through your decision-making process?
First of all, I did a fair bit of research, and I bought equity. And then when I started off slowly, I would only invest in Atlanta, and I'd be able to, which is wonderful, I'd be able to look at the property and what neighborhood was in, and I knew the neighborhoods in Atlanta and which ones were, had promise. And I'd look at who owned it, because that information is provided by ground floor, and what experience they had in redoing homes, and how much how much money they had put in themselves, and what the loan to value ratio was. And after all of that, I could decide to invest either $100 or $10,000, right? So
do you currently do that to this day?
Yeah. I've branched out a little bit. I go to Jacksonville now, maybe.
Very good, very good. So out of the 2 ground floor main products, as you know, you can either invest in LROs, which can be about 12 months or so term loans, or you can also invest in notes. Usually can be also 12 months or less in this case. When deciding, obviously these, comparatively speaking to other types of investments, can be considered short term. Is that your main focus for trying to invest in ground floor, for investing in ground floor, I should say, or what other motives or considerations do you take?
Well, it's really, for me, it's the stage of life that I'm in. I'm not looking to as much increase my net worth as enjoy my life with the net worth I've accumulated. So for example, I'm looking to buy a house. I bought a house up in Cape Cod. I do put it on Airbnb. I want to buy a place in Florida, Fort Lauderdale. Both are gay communities, and I don't want a mortgage. So what I've been doing is I've been saving money and putting it into ground floor, some in the stock market, but some in ground floor. So at first I had all my money in LROs, but I've been shifting my portfolio into notes with shorter terms, so that I could take the money out when I needed it and buy the house.
You have a particular project you're trying to save for.
Yeah.
And while you're still trying to accomplish that project, that money can be having some sort of passive income in the meantime. Well, you met with our new products initiatives lead, Tyler Harper, and you discussed Ground Floor Labs. It's an investment product at this time available to certain investors. which can be more of a long-term investment plan, or as Tyler put it, it's trying to find clever ways to finance homes and provide returns for our investors, basically in equity financing. So in the past, have you invested in other long-term investments? If so, what types of investments were they?
Yeah, no, I haven't, but that's because of my particular strategy and where I am in my life. As I talk to my children, I encourage them to do that.
Mm.
You want to grow your money and want to park it somewhere for 20 years and see the compounding effect? Well, do it with a higher interest rate.
In February of this year, we hit a new record in LRO interest repaid in the company's 10-year history. We also know, as noted in our monthly market trends publications of this month, the total volume of net new listings saw some decrease compared to the same month last year and in the last 52 weeks.
Of course. Yeah.
It also pointed out that, a silver lining, that a 1.8 increase in the median price for all single home listings on a year-over-year basis. Basically, also, as the publication noted, is a time for sellers to strategize and buyers to potentially capitalize on the lack of supply. So you also met and sat down with their co-founder and CEO, Brian Daly, earlier this year, and you posed important, hard questions about home values and the news of the market at the time, in relation to your investment. So I wanted to know if you could share with us and elaborate what were the points of concern brought up during your meeting with Brian, and how did you have the conversation go?
Yeah, so I had two concerns when I walked in that I wanted to address with them. How the portfolio was performing during this period when interest rates shot up in a really short period of time. Okay, so people who thought they could sell their home quickly, suddenly we're in a market where the interest rates were higher and there were fewer buyers, particularly in rehabs, I would guess. So a large portion of my portfolio shifted from active into extended or default. And that's where they sit today. And that was very concerning. Okay. My second concern was, well, how was that affecting the company? Okay. So I am watching my portfolio, my LRO portfolio that's in extensions and defaults. And I'm gradually seeing them getting repaid, not in the time period that was originally intended, a year. It might be 2 years, but they're being sold, and I'm getting the interest, for the most part, getting the interest rate that I expected to get. On the few defaults, if I expected 10%, maybe in one, 5% came back after the foreclosure and sale. In one, there was a 2% loss. But overall, my portfolio is still well above 9%. So that's not a bad mix. What the management did was explain very well that in this environment, cash is king, and there are lots of opportunities if you have the available capital, and Ground Street has the available capital. Okay, so if my investment strategy wasn't where it was, I would be investing in LROs again, because now they're on a new footing. Whomever is starting a project today has factored in higher interest rates, slower, more days on market. And so it was that period during the large increase in interest rates that really posed the risk for people. And it seems that, and it was a real test for Groundfloor, I think, to come through that kind of a period, because, from probably its inception, Groundfloor has been dealing with relatively low interest rates.
It is worth pointing out for those watching us today. Some of these loans that are extended do get to have their interest increased, right? So, and all of the interest and the income of that goes directly to the investors. But it is I can see how you were watching the news, looking at the trends, having your portfolio extended, and saying what's going on.
Yeah.
So, but
and it was really good you set up the meeting, because I was real skeptical and I was nervous. And so meeting with Brian reassured me that there is still an investment strategy in LROs if that's where you want to invest, okay? And that the company was financially healthy.
And if I could ask you just an overall question, what a percentage of your overall investments is in real estate?
So I have about 20% of my net worth is in real estate that I own and work with in Airbnb. I have another 10% that's in ground floor. Okay. So about 30% of my portfolio is real estate. And then the rest is equity in the stock market.
Well, you've mentioned before that you were a fan of the referral program that we have, right?
I never got me the $50 though. I never go for the $50.
As you know, well, that's one of the easiest way, for free money for yourself and the people that you refer to.
Right. But I think you owe me lunch. I haven't cashed in on the $50.
There is a place where you can track your referrals on your profile. Yes. So
okay.
You surely want to get your money for your efforts. Well, I was just going to ask you, what is a line or two lines that you have for when you're about to make these referrals to someone?
I'll tell you the conversation I had with my ex-wife, which is, she says, I have all this money sitting in my credit union account. And I said, that just sort of led me up to why is it sitting there? Let me tell you about ground floor. Here, this is where you should put your money and, let it grow. Even if you just put it in notes, you're earning multiples of what you are earning in the credit union. So you need a place to park your money, okay, or invest. This is a great investment.
Well, Andrew, this has been an absolute pleasure. I just wanted to thank you on behalf of myself, the ERG, and the company. Thank you for being an investor, and we certainly appreciate your business, Andrew.
Yeah, thank you.